Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, artists as well in crypto and blockchain all around the world. And today, you guessed it, I have another amazing guest. All my guests are amazing, but I'm really looking forward to this interview. This man is the CEO. I'm gonna say VLRM. I think it's pronounced Valereum. His name is Nick Cowan. Nick, welcome.
Thanks very much for having me. A real privilege. I'm looking forward to this. I don't know about the fantastic thing. I'll try not to disappoint. No pressure.
No pressure. No pressure. No pressure. All right. So let's kick things off with an easy question. What is your background, and is it a logical background for what you're doing now?
Yeah, so this is my 40th year. I started in '84, so obviously there's been a huge change over the 4 decades in terms of financial markets. I started out as a trader. I'm still a trader today. I worked in London and Tokyo, and I traded equities and derivatives. And I was hired by a company called ING Bearings after a guy, Nick Leeson, blew up the bank there. So I came in as the I guess you could call me the Mr. Wolf of rogue traders. So I came in and cleaned up that shop, and then became the global head of equities for 5 years, which was a big business in about 40 plus countries. And then after 20 years of 5 a.m. starts, I left to trade my own capital, so to go back to really the grassroots. And then I was asked to help, believe it or not, Gibraltar open a stock exchange. So I co-founded a stock exchange in Gibraltar. And then that brought us into this is a company called GSX, as in the Gibraltar Stock Exchange. And that introduced us to this company called Valereum. And they had approached us to buy our stock exchange. And in the end, they failed to complete that acquisition. So we actually decided to get married and get the two companies together, and we've basically folded in our company into Valereum, and that's where we are today. And that happened just earlier this year. So in terms of logical background, well, look, I guess having been at the sort of the epicenter of managing up to $5 to $10 billion of capital in different markets on our balance sheet and products, you're always fighting with the T+2 settlement cycle. So that background, is sort of woke me up in some ways to, every decade or 2 decades or 3 decades, you get a cyclical change or a systemic change in technology. And really, this started about 10 years ago. I think now we're just really starting to grasp the opportunities that are being presented in terms of making things a lot more efficient. So that if you like, inefficiency, even though things work, we're starting to see, GameStop and all that sort of stuff, where we think that tokenization is the future. So that, I guess, that background in risk and trading and capital markets and all that good stuff has very, very much helped in terms of trying to get your head around how technology can be used to make things more efficient and remove a lot of the friction that we see in today's capital markets.
I got a little confused about what you said. I just have a follow-up. You didn't have an acquisition, but you did have a merger and acquisition.
Yeah, so basically what happened was we had the parent company, GSX Group. We operated, one of our businesses was the Gibraltar Stock Exchange. So Valereum was looking to acquire the Gibraltar Stock Exchange from our parent. And we were very, very happy to indulge. And in the end, that transaction, for a number of reasons, unfortunately failed on Valereum's part because they couldn't complete the acquisition in the time frame that the regulator basically gave them. So we had ended up then with Valereum having bought half an exchange which they couldn't complete on. We'd sold half an exchange which we couldn't complete on, and then there was a change in management of Valereum. And so the chairman of Valereum and myself sat down and said, "Well, look, why don't we try to? I'm very interested in being part of a PLC, because a PLC that's trading on a public market gives huge amounts of opportunities to raise capital and increase your investor base." And Valereum PLC was very interested in acquiring our team and our technology IP to basically create a tokenization vehicle to build our business. So we decided to bring the two companies together, and the GSX group basically folded in to Valereum, and then we closed the Gibraltar Stock Exchange because we just thought, well, there's no point keeping that, and that's where we are today.
Got it. Okay. So, yeah, I was part of a spin off when a company I used to work at AIG when we spun companies off, and now you did a fade in or carve in, so that makes sense. Okay. All right. Thank you. Um, so let's talk about Valereum Markets. Right? What's it all about? What's your mission? What's your vision? What's your goal? What do you see things?
Yeah, I think when we sat down and started to bring the two companies together, we were very keen to continue the hard work that we've been doing at the GSX Group for a number of years previously. So we basically sat down and laid out our stall as saying, okay, look, we are of the view, rightly or wrongly, that tokenization is here to stay. We think that this is a systemic technology disruptor, and we want to be front and center of everything to do with tokenization. So, the PLC, the topco, has three verticals, and they're all focused on tokenization. And we want to basically provide whatever we can do to unlock capital and create value in tokenized digital markets. And we do that by, number one, building technology. We've been working on that now for a number of years, and we're due to complete version 1 of that later this year. I can talk about that a little bit later, but basically technology solutions that we can license and white label, all to do with tokenization, the entire life cycle. Secondly, running markets, so real world assets and public markets. So we've got our Valereum Markets division, and then Valereum Capital, which is an asset management business that will focus on investing and trading, but investing in tokenization opportunities, including things like yield farming and operating nodes and that sort of stuff, anything where value can be created. So those three verticals, and there may be more in the future, we believe is what we need to put us front and center of everything tokenization. So when people think about tokenization, we want them to know that Valereum is there to be able to provide that access, be you a financial institution or be you a retail investor looking to get involved in purchasing or trading in a real world asset, for example. And we also have our own token as well, which again comes from the GSX Group legacy. And again, I think that probably makes us one of the few PLCs with its own token, and that provides an enormous amount of opportunities to do some really funky things with our token and make sure that token operates across the entire Valereum ecosystem. So in simple terms, we're everything to do with tokenization. That's what we very much want to focus on, and to the expense of everything else. So if we're wrong, we're seriously wrong.
I don't think you're wrong. Yeah. So I want to talk about those three areas, but I want to talk first about something called the bridge, right? What is the bridge, and what remains some of the critical challenges that must be solved when you bring TradFi over to Web3?
Yeah, so when we were designing, we started to think about, okay, today, we know how securities get issued. We know how they trade. We know how they settle. It works, but we think that things can be, a hell of a lot more efficient. As simple as that. And when we started to design, okay, well, how do we create this efficient infrastructure to basically try to remove a lot of that friction? And in order to do that, we want to design basically a DLT-based infrastructure that supported T-instant settlement. And by T-instant settlement, you're basically taking all of the innovation that we've seen over the last decade in terms of crypto, all of the good parts of how securities trade and settle today in regulated markets, and try to bring those together into something that we believe is a lot more efficient, but also covers the entire life cycle of a security. So the bridge is a combination of top technology vendors that we've brought together, put a skin around it with our own IP, and that allows us to be able to issue a digital asset, a security, trade it, settle it, and manage it, in terms of corporate actions, be it a dividend or a coupon, etc. And that is in a turnkey solution. So whether you are an exchange or a broker or a financial institution that is looking to get into tokenization, we can basically deliver that solution to you and white label it. And it basically drives off three principles, which we believe is what tokenization is all about. It's to do with, basically lowering the costs. Secondly, improving liquidity and discovery. And thirdly, basically mitigating a lot of those risks that probably are, hidden in today's infrastructure, but are very much real, particularly when you talk about things like counterparty risk and stuff. And that's what the bridge is all about, a turnkey technology solution that we will be able to start to deliver as a white label solution starting in 2025. And we will obviously deploy that into our own Valereum markets vertical as well. And showcase that technology, be it in real world assets, so anything from tokenizing royalties to whiskey, but also through to public markets, effectively running a stock exchange, but in tokenized form with a T-instant solution. And for those of you that maybe it's going to step into properly boring territory, but what you want to be able to do is when you trade, you want to settle and you want your name to appear on the shareholder register at that point of instant trade. It's called settlement finality. And if you can achieve that, you've basically removed an enormous number of inefficiencies that currently exist in the T+2 cycle. So it's like anything, the T+2 cycle works, but we think it can work a lot more efficiently. And that's what this technology is providing. And that's what we've been working on for the last 5 or 6 years to get to this point in terms of design and development and delivery.
All right, we're going to peel back this a little bit. Not to get boring, right? But you remind me of my AIG days. I spent a lot of time in the middle office, and there are a lot of risks and costs associated with that whole settlement, right?
Absolutely right.
Now you have a turnkey solution at your company, but I'm thinking about I'm thinking about insurance companies and other large corporates who still have this T+2. And I'm thinking about the way that they've sort of saved costs over the years have been to do buybacks and lay off people, right? If you have the settlement finality, how can you help existing old school Web 2 companies come into the new dynamic of Web 3 without having to lay off people, without having to do buybacks, without having to do all the tricks they had to do to make the numbers look okay, but actually create an efficient organization for them?
Yeah, I think the first thing to state about all of this and the way we've designed our tech is we do not envisage this being an overnight big bang. So I think there's going to be a 5 to 10 year cycle until whether it's shift from vinyl to CDs to streaming. There's going to be a cycle whereby adoption is going to take time. And look, you worked in AIG, I worked in ING, very similar initials, and these organizations are huge and they are slow to implement innovative technology purely because of the structure that they've evolved from, where they have these different legacy technology platforms within the same organization. I remember meeting someone at Credit Suisse. They had, I think, 3,000 technology solutions and technology platforms within their organization globally. And obviously we know what happened to CS, but that's not unusual. So I think you've got the first challenge of these organizations, as huge as they are, adapting to innovation. And that's not going to happen overnight. But the more you're seeing organizations like BlackRock, et cetera, driving this, the faster the adoption is going to be. But it's not going to happen overnight. So that efficiency is going to take time, I think, to drill through. But I think if you've got anywhere where you have a legacy system, which is what we see today, and there's limited access, failed trades, lots of intermediaries, unconnected, disjointed systems at all points of the process. Costs are high, as you say, middle and back office. If you can actually replace that with immutability, end-to-end automatic reconciliation, for example, reduce the number of intermediaries and therefore friction, reduce the costs, reduce your counterparty risk, increase access, and all those good things, and then shift it to a 24/7 environment, perhaps in all markets, in all assets, in a regulated environment. That is not going to happen overnight, but that's what we believe is what has to happen. And I think what will happen is those organizations that slowly adopt this technology, there will just be a natural, I don't think it's like AI where you're going to see 70% of people unemployed. I just think you're going to see organizations become increasingly efficient. That will free up capital and perhaps allow them to do other really cool things that perhaps they were unable to consider doing, or perhaps just hadn't even thought about doing. That can obviously ensure that a lot of those people are put to good use to increase the stakeholder value within that organization, be it an exchange or be it an insurance company like AIG or whatever, a financial institution. Efficiency is going to have to be delivered, we think, because look, when I worked in ING and probably you at AIG, we had enormous middle and back offices, and that wasn't because they were inefficient. It's just because of the nature of the beast of the infrastructure we worked in. Where you're basically having to do a lot of stuff, relatively manually. A lot of it is not automated, and you just have an increasing burden of regulation and compliance. Again, just because of the nature of the products that we're in. And a lot of that stuff can be, I think, just taken down to being a lot more automated. And it happens in just about every industry. And I think in some ways, financial markets is one of the last ones. And insurance, as you say, has always been historically quite almost an over-the-counter business that we believe, automation and efficiency is going to create huge opportunities within those sectors.
I agree. I'm looking forward to the day that comes. I'm no longer in that huge corporate America, but I do follow a lot of the technology and the regulatory challenges going on, and there's lots of regulatory challenges no matter where you are, and you're in Gibraltar, right? But there are some common themes globally regarding these regulatory challenges that we have to face when we're doing tokenization, right? What are some of them that you're saying, the trends, and how do we address them?
I think what you're seeing now is, and again, this is my observations, right? So again, a lot of these could just be completely off point, but we first of all, we figured that a lot of the regulation would be in place sooner than it's basically emerged. When we started out on this journey in 2018, and you've met DC just before this call. He's on this call with me, and DC was with the company back then. We were really confident that as we went into digital markets, that regulators were going to be at the forefront of driving this and putting a perimeter around it. And 6 years later, the SEC is basically saying, it's a security unless it isn't. And that I think is providing actually in some ways, uncertainty. So I think some of the regulatory challenges that need to happen is, regulators are definitely getting up the curve. They're obviously very focused in terms of investor protection. That's key. Clearly, the FTX setbacks haven't helped the cause, right? But I think you're now going to see an acceleration in MiCA in Europe, etc., and what is happening in the States, where regulators are going to really get their act together and start putting in a framework where actually it's transparent to all actors, and that ultimately, if you're in the business, ultimately you just want to know what the rules are, right? If you know what the rules are, you can stick to them. And I think until now the rules have been really vague, right? If Coinbase can get a Wells notice, they're just like, how can that even happen? We've been engaged with you for years, and you smack us with a Wells notice. What is that all about? And I think the SEC's or regulators have almost ended up in a position where they're just like, okay, we're not quite sure how to do this. Let's just basically categorize everything as securities. That all has to come out, I think, in the wash. Otherwise, you're going to have, jurisdictional arbitrage, which is probably still going on today, and a little bit of a race in terms of market share. I think that coordination needs to take place, and those regulations need to basically mature pretty quickly, because whether you're looking at the protection of assets or AML or making sure investors have information and all that good stuff, and you look at the risk with it. You talked about legal, regulatory, counterparty, custody risk. You can just go on AML. You just keep going on and on. I th- I think, and we think tokenization can get around all of that. They're still financial securities. They're still subject to legislation. But a lot of the concerns I think that the regulators have today is to do with investors not really understanding what they're doing and still allowing perhaps actors to exploit those investors who don't know what they're doing. If you have a complete data record of all transaction that is immutable, and you can provide the information and data for all counterparties, including regulators, by the way, venues, issuers, and investors, etc., you start to create that transparent regulatory perimeter. And I think that's basically what's needed. So again, it's not going to happen overnight, and that's why we very much see this as a 5 to 10 year, not play, but basically an evolution of where we are today to where we need to get to in order for adoption to be fully implemented. And we're firmly of the view it's happening. The train has left the station, and it's only going to accelerate from here as regulators start to basically get their act together and start to punch out perimeters and frameworks so that everybody understands what the rules are and they can build their businesses accordingly. Because we talk about regulatory risk. Sometimes you have to talk about regulator risk. You don't want to go and invest hundreds of millions of bucks in a company, in a platform, in a franchise, if you're not quite sure what the regulators' position is. Right? That has to be resolved. And the US is normally at the front of all markets. So I think a lot of eyes are on what's going to happen with the regulatory playing field in America, because that will, I suspect, drive quite a lot of what happens globally. But it's going to happen.
So you said a really interesting concept there, that, and this is part of your trader hat, I think. You said jurisdictional arbitrage.
Yeah.
And that word has been popping up a lot, or not the jurisdictional arbitrage, right? And I'm thinking arbitrage trading. How do you, putting on your trading hat, which is your second element in addition to the ability of the technology, how do you see trading within jurisdictional arbitrage opportunities or environment?
Yeah, it's a really good question, right? Because if you look at look, my background, okay, so whether you're trading securities in the UK and Europe and arbitraging with ADRs, right, or whether you're trading Nikkei Simex futures, it doesn't matter. What you're doing is you're trying to extract an anomaly between two markets, in the same way that you can buy BTC on Binance and short it on Huobi or sell it on Huobi. Part of the challenge historically that I've certainly had in a lot of those markets is you are trying to factor in the settlement risk, let alone other risks of being able to buy an ADR in the States, for example, break it into common and use that common to fill the transaction you have done in Europe. So Barclays ADR versus Barclays odds. That arbitrage, and there's always that risk that something doesn't happen, the securities aren't delivered in the 2-year cycle, and suddenly you've got one of the counterparties saying, where are our shares? Okay, and part of the reason for that historically has been the non-interoperability, if you like, of the infrastructure players, right? So you have a UK marketplace, right, with the London Stock Exchange and Crest and all that good stuff. You have DTCC and the NYSE and whatever, NASDAQ in the States. When you go over to Europe, you have Deutsche Börse with their platform. You've got the Europeans with Euronext, and you can it's a bit like Spanish and Portuguese. They kind of understand each other, but they don't really talk. They don't really talk the same language. So you have this dichotomy between jurisdictions. They're actually quite mono. And that's created, I think, in some ways, the inefficiency of markets. So what these big infrastructure players could sit down tomorrow and say, should we just put in an infrastructure that enables us all to communicate with each other instantly? But they haven't. And so what you end up with is a bunch of jurisdictions competing with each other. What we see is really the way things have to go is, in terms of interoperability, you want to be able to have in a T-instant environment infrastructure. It doesn't have to be a single chain. It can be a multi-chain infrastructure which allows different liquidity pools to communicate with each other. So what do I mean by that? If you have all the relevant products firing in a infrastructure, and by that I mean a tokenized equity, a tokenized CFD, a tokenized swap token, securities borrowing and lending board, etc. So you have just-in-time algorithms searching for best bid, best offer. I should be able to buy my Apple tokenized app token, for example, in Europe, and sell it instantly, for example, in the States, instantly. I should be able to have a BBBO, best bid, best offer algorithm where I can actually put in a buy order for Apple, and it searches for the best offer where Apple is trading in tokenized form. And that could be at any point, anywhere in the world. It could be on a Japanese market, it could be on a Hong Kong market, it could be on a German market, or it could be in the US. Now, for me, that presents investors with choice. It presents investors with efficiency. You could argue, well, doesn't that rather undermine liquidity? Because shouldn't liquidity be centralized in the single marketplace? I would argue that actually, you actually don't need to do that. If you have access to huge investor pools globally, being able to get access instantly via an app on their phone, and subject to legal, regulatory eligibility, compliance, AML, whitelisting, all that good stuff, park that for the moment, that you are allowed to buy Apple because you're eligible, then you should be able to buy that at the best price anywhere in the world at any time. And right now you can't do that. And you can't do it because the systems are, 50, 100, 200 years old. They've evolved, right? But they're evolving very quickly. And that technology that we're seeing now emerge will drive through that efficiency. So for me as a trader, I'm really excited, right? Because if I decide on Sunday morning I want to be able to get long of Apple, I think I should be able to. I shouldn't need to have to wait till Monday because I've got to wait for the market to open. That's just a small example of how I think things can and should evolve. It's not going to happen tomorrow, but it needs regulatory support. It needs market support. But if the legislation can support that type of those transactions to happen, I believe it can. Then the corporates should be able to support that as well, and it's just going to drive liquidity. You open up investor pools to issuers to raise capital, and that's ultimately, in my view, what makes the world go round is capital. And you should be able to allow investors to get access to some really cool stuff anytime, any place, anywhere. And that's what I think tokenization in a nutshell allows you to do, to buy Apple on a Sunday morning on your phone using your Bitcoin balance as margin. That would be pretty exciting.
I can see, oh my God, crypto is 24/7, and that is, been a dynamic thing. But if you make the global stock markets with a heck of a lot more liquidity than the crypto market 24/7, that opens up a lot. It opens up many, many, many things.
It becomes really, really, really exciting, right? Because crypto has demonstrated to us, and by the way, we ran a crypto exchange within the GSS group, and wives don't like a 24/7 marketplace, right? When you're involved, but other than that, those markets have demonstrated that you can run 24/7 marketplaces really quite well with the right actors, with really not too many problems. If I want to buy crypto on a Sunday morning, I can. In fact, my mum can, and she's 80. She doesn't know anything, but she can onboard and spend her money buying Bitcoin. She's not allowed to buy Apple unless she goes through a broker, because guess what? It's risky. So you've got this arbitrage today between what investors are able to do and what they're not able to do, and that's just crazy, right? That's just and that's the opportunity, right?
Yeah, I'm not allowed to buy stocks either. My wife has a job where she works for a securities industry, and they're like, you're not buying individual stocks, which is fine with me. I love buying. So,
and I don't mean to criticize my mum, but honestly, to think that she can actually go and buy Bitcoin, but she can't buy Apple. I mean, of course she could, but the point is she could sign up with Binance today and not know what she's doing. And they would say, there you go. And she can go and buy BTC on margin. I mean, can you imagine 100x margin? She hasn't got a clue. And yet she has to call her broker if she wants to buy British Telecom. It's like, come on, what the freaking hell is that all about?
Yeah. So I want to talk.
That's what's got to change, right?
I agree with you. It's going to change, and it should change. And I want to talk about this idea of liquidity that you've been bringing up, because the future of finance may just be yield farming. It may be part of it, right? How do you play a critical role or pivotal role in helping yield farming mature?
Yeah, there's kind of like not really universally probably understood or known about. But part of this whole innovation, right, is building different protocols and blockchains. And to build blockchains, generally you need validators and you need builders, right? So that's ultimately what you're looking for. And if we've been running a node on Polymesh, for example, and you can really get access to some incredible opportunities in terms of helping protocols build the technology of tomorrow, right? That's number one, but also be rewarded for it. And you can be rewarded basically by staking, for example, the underlying tokens on those nodes on that protocol, and some of those yields are fantastic. So part of our third pillar, we've got the technology division and we've got our markets pillar, but we're also building the Valereum capital pillar, and not only will that run trading as an activity, but also yield generation, right? And that's where we raise and we invest third-party capital. And if we have excess capital within Valereum Topco, the PLC, we can also put that to use within Valereum Capital Management, and basically, invest in some of those nodes. So run nodes and help protocols develop the technology of tomorrow and be paid. And some of the yields are fantastic. Now you can build a risk yield curve, right? So some of the new sort of startup, relatively high risk blockchains, you can apply a degree of caution and risk management. Your more mature ones, for example, like the one I just mentioned, you can obviously risk manage that slightly differently. And you can put capital to use and generate some fantastic yields. This isn't necessarily huge innovation, because there are companies and funds out there doing that today, but we really see that still as very much an emerging investment opportunity. And you can generate some really good yields as long as you understand the risks in doing so. And that's something very much that Valereum wants to be involved in. And we've made that publicly known as well in terms of our first go live shareholder call that we did back in February. We talked about yield farming, etc. So we're very focused on that.
The early days of yield farming were crazy. People spoke in hieroglyphs on their
unbelievable.
So
unbelievable. But even in Polymesh, we were yielding, because obviously what happens is you can, if the token starts getting attractive and more people start coming in, and for example, the price of that token starts rising, your yield changes, right? And some of these yields, like you say, they're ridiculous. Now, obviously, you can get 200-300% sometimes in brand new startups, and there's a reason for that, because obviously they're much higher risk. But even in the more mature protocols, yield farming offers some great opportunities for investors to generate some really cool returns. Very powerful when we're in a zero interest rate environment, but even today, right? I think we all agree interest rates are probably going to start to go down over the next 24 months. Whether they're 5.5%, if they're going down, there's going to be more and more capital looking to be deployed to generate returns, and we think that's just, again, a really exciting area to focus on.
I hope rates go down. A lot of that depends on the government, So a lot of people have been talking about for years, talking about the killer app, right? And what's the killer app? And is it to replace Microsoft Excel? Is it to replace email? you guys have a different philosophy on the killer app, and you think that's government adoption, right? How is government adoption going to be the real game changer, and what does that look like?
Yeah, I think so. But I guess if you we're quite focused in on very focused in on financial markets, right? That's obviously our sweet spot. So, and what we've taken really is basically a deep capital markets knowledge, and we've said, okay, how can we apply this emerging technology to make financial markets more efficient? That's so when we talk about killer app, that's really where we go in on. So I guess when we think about killer apps, and then I'll come very much to your point, your question. Killer apps. So for example, if you want issuers to be able, right, to be able to issue various instruments, and for those investors globally to be able to acquire those instruments, in a unit size of their choosing, over a wide range of currently inaccessible asset classes. You can use tokenization to facilitate that. So the killer app for us is that whole thing about immutability and efficiency and all of that good stuff, but whilst also managing out your risks and enabling that 24/7. And you would not, if you were starting from scratch, design current legacy systems with the way they're currently structured. I don't think, right? You wouldn't, if you came down from space and looked at that on a piece of paper, you would say, why the hell would we build an infrastructure in financial markets to support that? Okay, so in terms of killer apps, so what do I want to be able to do, and what do we want to be able to do? I like the idea of being able to move my assets instantly, cash and digital assets, to wherever I want to move them. And sometimes right now with trying to move dollars, it's just horrible. I can move $1 million of USDT in about 1 second. If I want to move $1 million, I've got to go through the degree of Spanish Inquisition of where did the money come from? Who are you? Why do you want to do this? And it's just like, bloody hell. I want to be able to do stuff. And if you take an example of why we're excited at Valereum, okay, so here's one just small example, and then we'll move on to government support. Okay, so we have a token, right? We want you to be able to stake that token, which you can do today. And we want you to be able to earn rewards. Okay, that's exciting, right? So Avios do that on airlines, right? You can earn your rewards. What can you do with those rewards? Well, you could, I guess, convert them into USDT and then USD and go and buy a burger. Okay. Why not be able to press a button on your app and turn those rewards into Valereum stock? Right? We're listed, we trade on the stock exchange. So why not be able to bring together a customer, right, that's using our services, a token holder that is staking and playing a part in governance and all the good stuff that your token offers, but also be able to convert that customer into a shareholder. Think Apple, right? Loads of Apple. You're either, as Samsung or an Apple guy, right? So you're either, but if you own an iPhone, if you get that iPhone owner to own Apple shares, they're going to stick. We call that the investor concept, right? And if you can legally enable that in a regulatory environment to bring together the ability for customers to be able to swap between stock, services, rewards, their token, you can then start to cross-sell products to that investor. And that for us is the killer app. When we talk about Valereum, we're building technology, we're building markets. We're going to have Valereum Capital, but that's your killer app, where you're basically saying to a client, you're a shareholder, you're a token holder, you're a customer, and here's a bunch of services and products and lifestyle aspects that we want to provide you with. So how do you do that? Well, you need, in my view, you can either try to circumvent the system, right? Well, I always say that's kind of like running up Main Street naked. You can do it for a while, but it probably isn't going to end well. And actually what you want is, as we're seeing now, I think, an increasingly accommodating global legislative climate when it comes to crypto regulations. It might not feel that way, but it is. You're seeing Central banks, I think all of them are talking about central bank digital currency. A lot of people find that blasphemous. They'll be able to see what we're doing. They can anyway, right? That's the whole point of blockchain. They can see what you're doing. So just, get over it, right? The point is, if you've got adoption and you've got a regulatory perimeter, and governments and regulators are more confident that investors are protected, they can see the risks, they understand that mainstream adoption. And I'm talking about mainstream adoption, right? You talk about crypto, it's, what is it, a 2 trillion, 3 trillion market cap? It's less than Apple. That's not adoption. That's exciting, but it's not adoption. You can't have an entire universe of cryptocurrency assets being worth less than one company that sells phones and computers. That isn't mainstream adoption. You need to be $100 trillion market cap, right? So, and that only happens when governments and regulators say, okay, we're comfortable now with AML. We're comfortable with bad actors not being able to get away with stuff. That is how this is going to, I think, evolve. And so when we say we think that you need government and regulatory backing, I know it goes against a lot of what, the origin or the origins, right? I mean, talk about Bitcoin. Bitcoin was followed the, 08 crisis, because they said, okay, we need to be able to build a financial system that doesn't need to rely on banks. What happens over time, though, is regulators will basically get their arms around stuff. So I think that is only going to facilitate adoption, even though a lot of people may not necessarily agree. And I was reading something I don't know, you'll remember a guy called Ivan Boesky, right? He passed away this week, and I remember him in '86, right? He was and he was the inspiration for Gordon Gekko on Wall Street, right? So he was the guy who said greed is good, and he used to give bankers briefcases full of $100,000, right? Get the inside track and then basically make millions. His arrest, I didn't realize this. I was reading his arrest this week resulted in the SEC and the government putting in place the first insider trading rules. That's in 1986, and not even, it's 40 years ago. Before that, you could do whatever you wanted. And I love history, right? There's American Steel, 1901, John Gates, true story. He announced they were closing their steel mills. The stock dropped 50%. The thing was, he was short of his own stock. He covered his shorts, went long, and then announced the next day, sorry, we're reopening the steel mills. I think he made $100 million in 1901. Totally legal. Absolutely, you're allowed to do it. And the reason why I go off point a little bit is I think you've got to have regulators and governments comfortable with this innovation, embrace this innovation, put around a perimeter that provides transparency. But actually, which takes us right back to the beginning of this podcast, right? We are absolutely convinced that transparency regulations gives confidence to corporates and investors to build their business accordingly. As much as it sometimes goes against the system, it's the only way you're actually going to turn this into $100 trillion market space, in our view, and deliver those efficiencies that I've been going on about.
I didn't realize that we're smaller than Apple as an industry. That's real. Yeah, it needs to be at least 100x that what we're at today.
Yeah, it's mad, isn't it? Right? I mean, these companies like Amazon or Apple, they're bigger than the entire crypto market cap. So there's a long way to go. That's the opportunity, right? There's a huge way to go, and that's why people say, "Oh, Valereum, you've missed the cycle." I don't think the elevator hasn't even left the ground floor yet. We've just started.
We just started. Yeah, interesting. Really interesting. Thank you. I want to thank you for very much for speaking with me today. I love talking to you.
Absolute pleasure. Thanks so much for having me. Absolutely fantastic.
I have one last question. And this one's easy. How can people find out more information about you and about Valereum?
Yeah, go to VLRM, Valereum.com, and you'll find everything on there. We've got a Telegram group as well, and you'll find us on TG, and we're on X as well. Nidhi said Twitter, we're on X. But yeah, anything you want to know, come to VLRM.com and get in touch. We'd love to talk to you. And thanks today again for the platform. Really, really enjoyed it. Very kind.
Thank you very much for your time today.
Thank you.